This stupidly simple 1 minute scalping strategy is what gives me daily profits like this, and this. In fact, many of my students who are also complete beginners are posting daily profits with this exact strategy every single day. You're going to get the exact step-by-step blueprint on how to execute the strategy for yourself. I'm also going to show you real examples of this strategy in play in genuine market conditions, just to prove to you how easy this is. There's only two things you really need to actually beat the game of trading and become profitable. The first one is a proper risk management strategy, and the second one is a proper trading model. And this video is going to give you both of those things. And that brings us on to the trading strategy to begin with that I want to teach you. And it's all based around one single candle. And the model that I'm going to teach you about based on that candle is called the first candle rule. Now, the great thing about the first candle rule is that, number one, it tells you the overall direction that the market is going to be going in, and it can give you that information in just the first 5 minutes of your trading session. It helps you to also understand where you're supposed to be finding your entries very accurately and with pinpoint precision. It doesn't really require any kind of bias, no fancy indicators, as we've said, and it sets itself up every single day. So that really removes all of the guesswork out of your trading and makes this a very simple to implement system. All you need to do is essentially follow the steps that I'm about to show you and just execute the strategy. Every day is broken down into 3 separate sessions. We have the pre-market, which we also call the London session. We have the New York session, which is regular market hours, right? And then we have aftermarket hours, which is normally called the Asia session. Most of the volume for the day is going to occur in the New York session. So that's really where we want to be focusing our attention. And then we also want to focus the first candle, which forms at the opening of the New York session, which is the 9:30 a.m. candle. And that's 9:30 Eastern time. Now, you can use the opening candle for Asia. You can use it for London if you want to, but my best results and my students' best results have come from trading the New York session. A lot of people also like to ask me, what market can you use this strategy with? Well, this will work fine with stocks, options, futures, crypto, forex, whatever it is that you want to trade. But as always, please make sure that you're back testing whichever market it is that you're trying to trade. My focus has always been futures. I specifically trade NASDAQ and ES, so that's really what I'm basing this on. So the first step is when we go into that New York session, we are looking for the 9:30 candle that prints on the 5-minute time frame. All we're going to do is mark out the high like this of the 5-minute candle and the low like this. Make sure you include the wicks when you are marking out the high and the low. And then step 2 is we're going to switch over to the 1-minute time frame, and we are going to basically see that range, but within a 1-minute time frame. Okay, so what you're looking at here, this yellow box that you see here, that's essentially the high and the low of the 5-minute time frame that I just marked out. And what we're seeing on the inside is the 1-minute candles now printing within that range. Essentially, what we're looking for here is waiting for the 1-minute candles to basically print outside of the range. In this specific example, we can see right here that the 1-minute candles have printed to the upside. They could also print to the downside. If they print to the downside, we would then be looking for a bearish, short bearish move because we are moving down to the range, which gives us a suggestion that perhaps in the opening range, we're going to be moving to the downside. But in this example, we are moving to the upside. So we would be looking for a long in this example. Now, we're not just going to be looking for the candle to simply print. There's a very specific pattern that I want you to become accustomed to and used to when you're looking for entries on this model. So once again, we have the high of the 5-minute marked out here with the green line there. And here's the low. We can see that the candles have printed to the upside in this example, right? So what I want you to specifically look for is a fair value gap to be forming outside of the range. Now, a fair value gap can be identified right here. I've got this yellow box that kind of points it out. Essentially, what this means is that there is a gap between candle 1 and candle 3. So candle 1 would be this candle here. Candle 3 would be the candle here. So this middle candle, which is candle 2, has a nice big gap. And the way that gap is formed is by candle 1's high not overlapping candle 3's low. Okay, so you have to make sure that the wicks and the bottoms of this candle here and the top and the wick of this candle doesn't overlap, allowing us to have a gap in the middle of that 3-candle pattern. Now, a lot of people in my previous videos have mentioned that they feel that the fair value gap is not actually forming outside the range. The gap is forming outside of the range in this example. Sometimes the gap's going to form very, very close to the edge of the range, and sometimes it's going to print right outside of the range. Now, you have to use your logical mind here. If the fair value gap is printing to the upside of the range here and it has broken it, even if it's just broken it a tiny little bit like this, it's still breaking the range. So it still is a valid entry, even if it's just on the tip of the range. But this is the pattern that we're looking for when price is breaking outside of that range, whether it's the upside or the downside. And then the final step of this is once the fair value gap has printed. So once again, we can see here candle 1, 2, and 3 with the fair value gap just here. Let's mark it out for you here. Once this fair value gap is formed, we are looking for this specific candle here, right? Because in order for this candle to be a fair value gap, it has to have the 3 candle pattern, right? So to make this really simple, right? Let me clear this up. Candle 1, candle 2, and candle 3. These 3 candles have to fully be printed on the chart. And what I mean by that is that this 4th candle has to begin printing before we can even call this candle a fair value gap. And the reason that is because a fair value gap is a 3 candle pattern. It's not a 2 candle pattern, right? This 3rd candle here, so if we've got candle 1, 2, and 3, the only way that this 2nd candle becomes a fair value gap is once this 3rd candle has printed. Because let's just say, for example, this 3rd candle hasn't printed yet and the price suddenly comes down to here. Well, if that happens, then suddenly this 2nd candle is no longer a fair value gap. So you have to wait for the 3 candle pattern to fully form. And as soon as it does, we can then enter on this next candle as soon as it starts to print. So that's where the entry model would be. We would enter on that candle there, simply looking for a continuation model for price to trend in that direction. Here's another example where once again, we have the high of the range here. We've got the low of the range here. The candles are printing to the upside. We've got a really lovely fair value gap here. And again, candle 1, candle 2, and candle 3 here have printed. So the entry model would be right there where that candle begins to print and this candle has closed. Okay, so the entry would be around about here. Okay, so that is how we identify the correct pattern behavior for the candles, and that's where we would be entering the trades. Now, what we're going to do is we're going to walk through some live examples of this strategy, and I'm going to show you how it plays out in real market conditions. But before I do that, I need to give you a warning, and the warning is this. Before you turn this video off, after you've watched the strategy and go and try it for yourself, you must go to the end of this video. You have to watch the entire thing because yes, it's great once you've learned the model and you can go and execute it. That's fantastic. But ask yourself, there is a reason, right, why you will go and learn a model like this, but you still haven't made any progress. And the reason that that happens is because 99% of people are more focused on learning the really fancy stuff like learning the models, but they're not interested in learning about risk strategy. And the crazy thing is that as boring as risk management is, it is actually the thing that makes you profitable. If you don't understand risk management, it doesn't matter what model you use, because guess what? I said it at the beginning of this video, every single strategy works. The reason that the strategy fails you is because you're not executing proper risk management. I'm going to show you how to apply that with this model. And if you do those 2 things together and you execute those 2 things together effectively, you will not need to do anything else. I promise you, you can do exactly what the model is in this video, apply the risk management strategies that I'm about to show you, and you can go and become profitable. That's all you need. So please pay attention. Don't just leave the video halfway. Make sure you watch the whole thing. Let's jump on the charts. So I'm on the NASDAQ chart right now. It's the 5-minute time frame as mentioned. And this bearish candle here is our culprit. It's the 930 candle. This is the one we need. So once the 930 candle has printed, we are going to go ahead and get our horizontal tool and mark out the high like this. And I'm just going to go ahead and mark out the low like this. Once I've done that, I can switch over to the 1-minute time frame. And what I'm going to see right away is 5 1-minute candles, obviously, because it's the 5-minute time frame. So on the 1-minute time frame, we will have 1-minute candle printed 5 times for the first 5 minutes. Once we have that, we are waiting to see which side of this range we are going to break. Now, already we can see that price is moving to the downside. Now, interestingly, we actually have a fair value gap that has actually formed right here, right? We can just see here. But the thing is, in this example, the fair value gap isn't really to the lower end of the range, which makes me feel like this isn't really a gap that I'm interested in just yet. And also you can see that this candle has not closed outside the range. So I don't really like this particular candle yet. So I'm going to go ahead and carry on playing and see what happens next. Great. So here we can now see that there is another fair value gap that has formed. So we can just see this second gap just here, right? And we can see that this three candle pattern has printed outside the range. Now, is this a perfect setup? It's not the best because what would be really good is if this particular fair value gap had printed just outside, like if it had just creeped out, then this would be a much more effective model. But because the three candle pattern has pushed outside the range, I feel that this could be a setup, but this isn't something that I would call an A plus setup of this model, right? I would call this more like a B or a maybe even a C. But we do have a three candle pattern, we do have a fair value gap, and we have pushed outside the range. So I'm happy to go and execute on this trade. As long as you get one of the candles printing outside the range, but you have that fair value gap pattern, then you are able to execute this model. I think in previous videos, I have spoken about how I want to see this fair value gap printing outside the range. And that really is the A plus version of this model. But this is the example that I have right now. I've just gone back to the last day's kind of data we've got because I want to just show you a real live example, right? And this is how I would play this. So we're not always going to have a perfect setup. That's something that you have to understand. Sometimes setups are going to be a little bit janky and you have to work with what you've got. All right. So we're just working with what we've got. So we've got a three candle pattern here. I'm okay with it. It's printing to the lower side of the range and we have printed outside the gap. So I'm going to go ahead and take a short here on this fourth candle, right? So the bullish candle is where we're actually taking the position. Because remember, this three candle pattern is only valid once the third candle has printed. So it wouldn't be possible for us to really enter on this third candle. We would have to enter on the fourth one. Now, in terms of our stop loss, all we're going to do is put it to the bottom of the fair value gap candle, okay? So that would be the candle body and include the wick as well. Once you've done that, you're going to look at the middle of your short tool position and you're going to see a risk to reward ratio. All I want you to do is I want you to go ahead and put this down once you get to a 2, like this. All right. Now, in a moment in this video, we're going to be talking about risk management. I'm going to be talking to you about really the strategy of how you actually make this a long-term profitable game. And what I've just shown you right there about setting your risk to 2, that is the golden nugget, all right? Now, in other videos, I haven't really explained why that's so important, but we're gonna break that down a little bit in a moment as to why it is so critical to this setup. Also, guys, for traders that want to simplify their trading and get profitable as fast as possible, check out my course, The 90-Minute Trader, where you get access to my entire trading strategy, as well as my advanced trading models that you do not see me teach on YouTube. Plus, you get access to my trading community and get to connect with other successful traders who are posting profits every single day. Plus, you get to see my daily market analysis, my ideas for setups, and you get access to a bunch of trading tools that allow you to become profitable even faster. If you're interested, I'll leave a link in the description below if you want to go check that out. So let's go ahead and see how this trade plays out. So here we go. Price is coming up and price comes right down to target right there. So that's pretty much how easy this model is. Let's take a look at another example right here, once again on the NASDAQ chart, and we are on the New York session. Here is our culprit, the 930 candle that has been printed here. So once again, I'm going to go ahead and take out my trend tool here, mark out the high, mark out the low on the 5-minute chart, and we're just going to switch over to the 1 minute. And let's have a look and see what's going on. So once again, we are trading to the downside here initially on this move, but let's see what happens next. So pricing is pretty wicky here at the moment. And here we go. So if you take a look here, we can see that price has broken to the downside. And if you have been paying attention, you can see here that we have a fair value gap. Now, this setup for me is a lot more clean. Why? Because this time the fair value gap candle has printed outside the range. Now, the actual fair value gap isn't outside the range, as in the particular gap is not outside the range. But what I'm interested in is that the body of the candle has closed outside the range. The body of the fair value gap candle has closed outside the range, which makes this setup really good. Okay. So even if it loses, right? Even if this trade loses, even if it doesn't work out, the actual mechanics of this particular model, this particular setup here is actually cleaner than the last one. All right. Let's go ahead and get this one set up. So we've got a 1, 2, 3 candle pattern. All right. We actually need to print one more candle here. Okay. Because that's the actual candle that we are taking, right? So we have our 3 candle pattern and we would be entering the trade right about here on this candle, right? Again, because in order for this fair value gap to be valid, we would need to have a 3 candle pattern formed. So we could only really be entering the trade here. We will then put the stop at the top of the fair value gap, including the wick. And we are just simply targeting the 2R move, as I mentioned before, right? Just like this. Let's go ahead and see how this one plays out. There we go. So this one hits in literally 1, 2, 3, 4, 5, 6, 7 minutes, and the trade is pretty much done and finished. So you can see how this model is extremely, extremely effective. It works very, very well. And no, it is not a 100% win rate model. There isn't one, but the model is very successful. And something that I really want to point out here before we move on to the next most critical part of this video is the win rate. I've seen a lot of people comment in the videos saying, Joey, what's the win rate? What's the win rate? Guys, the win rate is really subjectively just one part of an actual strategy here. And a win rate is not what determines the success of your strategy. The way you manage your risk is what's going to determine the success of your strategy. And I'm going to show you why in a moment. Now, I had a comment in one of my videos previously that said that a 50% win rate was not good enough. And I'm here to tell you that even if you had a 40% win rate, that's actually very, very good and is enough to make you profitable. And I'm going to show you how. If I were to give you a coin, heads on one side, tails on the other side, when you flip that coin, you're going to get heads probably around about half the time, and you're going to get tails probably about half the time, right? So let's put this down into some money numbers, all right? Every time you flip a heads, you are going to lose $1. And every time you flip a tails, you are going to gain $2. So is that going to be a profitable strategy for you? Well, let's break down the numbers and see. If you flip and you get heads 5 times, it means you're going to lose $5 because you lose $1 every single time you hit heads. If you hit tails 5 times, you're going to make $10 because you make $2 every single time you hit tail, right? So essentially, your net change here is a positive $5 because let's say you started with $10 in your pocket and you lost $5 because you hit heads 5 times. So now you've only got $5 left, but then you hit tails 5 times and you've made $10. So you now ended up with $15 in total, meaning your net change is positive $5. If you can see what we did on the charts earlier, where I told you to do a risk to reward ratio of 2 to 1, what that means is that every time you are putting risk on at 1, you are going to make 2 for every 1 you risk. So if your 1 is $100, it means that you have the potential to make $200, but you may lose $100 if you lose. So based on that model of 2R, by simply targeting 2R, if your win rate was 50%, you are profitable. You would have a profit factor above 1, and you would be a profitable trader if you could do that consistently. The model that I've just shown you is really fixated on the idea of achieving 2R. Those are very high probability takes. My win rate with that particular model is above 50%, okay? But our win rate is not always going to be the same. And the reason that is because my execution might be really different to yours. I might hit my entry sharper than you. You might be slower than me, or I might be slower than you. Who knows? But the point is that a win rate is really subjective because every single trader is different. We all execute differently. We all do things slightly differently. The only thing that you need to look at is the model itself is very, very good. And if you execute the model as close as you can to what I've shown you here, you can achieve a relatively good win rate. 50% is incredible, by the way. If you can do that and you can hit your 2 Rs, you can become a very profitable trader and make a lot of money. But I want to actually break this down for you and show you, well, what if it was less than 50%? So let's say we work with the premise of it being a 40% win rate, and we use the exact same analogy. So you go and you flip heads 6 times this time, and you lose $6 for $1 for every single time you hit heads. You are then going to hit your tails 4 times. So that's your 40% win rate. And this time you will make $8 because 4 multiplied by your $2 is $8. So your net result in this instance is, if you started with $10, you'd lose 6, so you've now got $4, but you've made 8. So add your 8 to your 4, and you're ending with $12. So you're having a net positive change of plus $2. So even at a 40% win rate, we're using a model with a 2R approach, you are still profitable. You are still in a positive profit factor. And if you're trading prop firms and you're trying to pass evaluations, or you're on funded accounts, this is an incredibly effective way for you to make tremendous amounts of money, because when you're using prop firms, you're actually leveraging the firm's money. So you could be trading multiple $50,000 accounts, multiple $150,000 accounts, and you could be making a lot of money even if you're doing $200 to $300 a day using the model I've shown you across 5 accounts, 10 accounts, 20 accounts, right? That money starts to add up. So don't shun it away just because you're seeing $2 there. What you're seeing there is really a gold mine, because at 40% win rate using this model, I can promise you, you can definitely achieve a 40% win rate with this model if you do exactly what I've been showing you in this video. So just bear that in mind. The win rate is not everything. It's always about how much R you're also going to be getting from the trades. And that is why we stick to 2R on the trade. Always target 2. Look, if you're a trader that wants to become more successful, more profitable, and get to your goals faster than ever, then do go ahead and check out my course, The 90-Minute Trader, where you can get my entire trading strategy, as well as advanced trading models that I don't teach here on YouTube, as well as access to my community and network with other traders who are posting profits and wins every single day. You also get a bunch of other resources and tools that allow you to get to profitability faster. I'll leave a link in the description below if you want to go and check that out. If you've watched this video, thank you so much. I hope you got some value from this. If you're a subscriber of mine, I really appreciate all the support you've been giving me, and I hope to see you in the next video next week. If this was helpful for you, please show it to someone else. Make sure you hit like, leave a comment, subscribe, and I'll see you in the next video.